Hi there. My name's Scott Rockins. I'm a mortgage broker with Dominion Lending Canada, and I want to take a few minutes of your time today to share with you one of the professionals I've had the pleasure of working with in the past. So I'm here today with Michelle Filipenko, and she's a financial advisor. Thanks for coming today, Michelle.
Thanks, Scott.
And obviously, in the market for investments, there's been a lot of activity lately, and a lot of volatility in the market. And I wonder if you wouldn't mind sharing a little bit of your knowledge and experience in the current investing market.
Well, over the past 2 years, really what we've seen is, two categories of people, right, who've been affected by the market. So the first is people who, they've come in late to the markets, or they've missed some of the potential of the rebound because they're waiting for the markets to bottom.
Right.
And these might generally be people who are, say, 55 years or younger. Of course, it could be any age, but, if you look at the overall picture, you can see that, bear markets are generally 16 to 18 months long. So those periods of time, have traditionally, we have worked our way through them. So the question is, why would this not be a reason to think that this is another time of volatility that will be followed by a time of growth?
Right. So when you say bear market, just to make sure everybody understands, because I know we know what we're talking about, but bear market's really like a downturn market, like a bear sleeping in a cave.
Yeah.
It's been out, eating, and now it's hibernating in its cave. So it's a downturn in the market.
Exactly.
And then when we have an upturn in the market, we call that a bull market, right?
Exactly.
Right. So why would we not believe there's always a bear and then a bull? It's always going up and down. So why this belief that it's not going to come back up? That's sort of what you're saying.
Yeah.
Yeah.
Sort of, if you look at the market over the long term, it has gone up.
Yeah.
So you look and you can see a typical financial chart, economic chart.
I love charts.
Exactly.
They're great.
Charts are great.
Charts are great. Yeah. If you like charts, come talk to us.
I like colorful charts. That's just me.
Yeah. But
yeah.
you can see that over time, the market does rise over time, even though it has ups and downs.
It does.
Yeah.
So you'll look and you'll see the pattern, right? And
Yeah.
and so the bear market is relatively short compared to the time of growth.
Yeah.
So that's the sort of the first market, and they're, as I said, they come in late. So the second category are those people who are nearing retirement or early retirees, and they're making a lot of noise right now because their advisors have not properly had them, invested in the market. So what happens is, they come to a point where they may need to draw funds from their investments, but
Right.
the market may not be corresponding to their needs, and they may be forced to, say, take a loss or something
Right.
like that. So, a lot of times, for them, that's a challenge, right? To make sure that they can live the way they want to live and be prepared for something like that. Because if a bear market happens, or the stock market goes down, well, they still have to continue on, supporting themselves, right, during retirement.
Yeah. So that's really good because that's your outlook on the market's really focused on the investor, on the person you're helping, and how it has affected them, right? It's probably indicative of your approach as well, right?
Yeah.
So it's excellent. You see, there's some people that haven't really taken advantage of it as much as they could have in the downturn, and some people that they haven't been positioned right to access their money, kind of thing.
Exactly.
Yeah.
So,
okay.
Yeah, so the most important thing to do when it comes to planning is to ensure that, people can stay invested regardless of the type of market, right?
Yeah.
So, and you want to actively be able to participate in those markets as well, to take advantage of them.
Yeah. Okay. Well, that's excellent.
Yeah.
So we're going to share some more information in future parts of this interview, so please stay posted. And thanks for watching our video today. And thanks for joining me today, Michelle.
Thanks, Scott.